All right, let's dive right in. Today, we are unpacking the latest moves from one of the most watched investment portfolios on the entire planet, Warren Buffett's Berkshire Hathaway. You know, with over $300 billion in assets, every single shift sends a signal. So we're going to pull back the curtain and see exactly how one of the world's greatest investors is playing the market today.
It really all starts right here with this one iconic quote. And listen, this isn't just some clever saying. It's the fundamental operating system, the entire playbook behind every single decision we're about to break down. If you can understand this one principle, you've got the key to unlocking the whole strategy. So what does this golden rule actually look like in practice? Well, it's a philosophy that has guided Berkshire for decades. It's what's allowed Buffett to find these incredible opportunities in moments of total crisis. You know, from the dot-com crash all the way to the European debt crisis. At its heart, the strategy has a name. It's called contrarian investing. And it sounds pretty simple, right? Just go against the crowd. But what it really means is having the guts to buy what everyone else is desperately trying to sell, and having the discipline to sell what everyone else is clamoring to buy. It's all about seeing that long-term value where other people only see short-term fear. And you know what? There is no better example of this whole philosophy in action than Berkshire's single biggest new bet this past quarter. This move, it just perfectly captures what it means to be greedy when others are fearful. So here's how it played out. It follows this classic three-step playbook. First, fear takes over the market. Wall Street starts worrying about rising medical costs, about new government regulations, and that pushes United Health stock down. Second, while everybody else sees risk, Buffett sees an industry leader with rock-solid fundamentals. So third, he takes that contrarian action, investing, and investing heavily, while pretty much everyone else was heading for the exits. And when we say he took action, we mean it. Berkshire didn't just dip a toe in the water here. No, they started a brand new position in United Health Group to the tune of $1.6 billion. I mean, that is a massive, massive statement of conviction. And just to give you a sense of how huge that is, this one purchase, boom, instantly made United Health the 18th largest holding in Berkshire Hathaway's entire $300 billion portfolio. That is a gigantic move that just screams how much long-term potential Buffett sees in this company. But that United Health bet, that was just one piece of the puzzle. To really see the full strategy, we need to kind of zoom out and look at the other major adjustments he made across the entire portfolio. Okay, here's the quick overview. On one side, you've got Berkshire adding to positions, getting greedy in healthcare, in Japanese markets, and in energy. And then on the other side, you see them getting a little fearful, or maybe just smart, by trimming back on some of their huge winners like Apple and Bank of America. And that greedy approach wasn't just in healthcare. Berkshire also kept building on a massive long-term bet located far, far outside of the US. The scale here is just immense. Berkshire added tens of millions of shares across 5 of Japan's biggest trading houses. Now, this isn't a bet on just one company. It's a broad bet on the entire Japanese economy. They're likely seeing a ton of value in a market that's been kind of overlooked for years, but is now really starting to make some big corporate changes. Now, for the other side of that coin, being fearful when others are greedy. Berkshire sold 20 million shares of Apple and over 26 million shares of Bank of America. But look, this doesn't mean they've lost faith, not at all. This is classic profit-taking after these stocks have done incredibly well. They're just cashing in some chips while the market is feeling really enthusiastic. But you know, for all the headlines about the buys and the sells, the real story of Berkshire's philosophy, the true secret sauce, might just be in what didn't change at all. The foundation of this portfolio remains absolutely rock solid, and you can see that conviction right here. Just 5 companies, Apple, American Express, Bank of America, Coca-Cola, and Chevron, make up this staggering portion of the entire public stock portfolio. These aren't short-term plays. These are the foundational pillars of the whole thing. And let's put that Apple sale into perspective for a second. Even after selling off 20 million shares, Apple is still the undisputed king of the portfolio. It's actually larger than the next 2 holdings combined. So that shows you that trimming a massive winner isn't a sign of lost faith. It's just smart, prudent management. And this stability, it goes even deeper. I mean, just look at this list of iconic companies. American Express, Coca-Cola, Moody's, Kraft Heinz, Visa, Amazon. Berkshire did not sell a single share of any of these companies this quarter.
These are the long-term pillars, the absolute bedrock of the portfolio.
So after seeing this whole strategy in action, we have to look ahead because right now, Berkshire Hathaway is on the verge of its most significant change in modern history. I mean, just think about this timeline for a second. Warren Buffett has been at the helm of Berkshire since 1965. His plan to step down in 2025 marks the end of an incredible 60-year run. This is a truly monumental shift. And the person who's been designated to take the reins is Greg Abel. As the current vice chairman of all of Berkshire's non-insurance businesses, he's been deeply involved in the company's success for years, and he has Buffett's full and complete confidence. So the crucial question is this. We've spent this entire time decoding a philosophy that is just so deeply connected to one person. The ultimate question we're all left with now is how this powerful, battle-tested strategy of fear and greed will actually endure, and maybe more importantly, how it might evolve in the new era ahead for Berkshire Hathaway.